Hi, I'm Adam Watson from the JMRD Watson Wealth Management Team's Chatham office. I'm filming this video on the evening of September 27th after markets have closed for the day. Yikes, it's a little bit scary that this is my third video for the month of September. So what does that mean? Interest rates have been in the spotlight around the world as most countries have risen rates again this month. Switzerland followed suit and did as well, and that leaves Japan as the last negative interest rate country in the world out of the major countries. And markets haven't been having a great month in the lead up or from and to the U.S. Federal Reserve meeting. So U.S. markets are likely to finish the month down for the eighth month this year, and it seems like negativity is prevalent everywhere, whether it's in the news, in the media, in print, the talking heads, or in phone calls that myself and any of the other team members are having with clients. Even some of the most seasoned stock investors are feeling a bit discouraged after nearly continuous lower month after month, and one of the worst years since the great financial crisis in markets back in 2008. Um, one indicator that seems to be popping up a little bit here is the bull bear sentiment indicator, and that is basically a survey that asks people whether they're bullish, bearish, or neutral on the markets at any given time. And right now the negativity or bearish reading is at almost 61, meaning that 61% of respondents are negative or bearish on the markets right now. For reference, on average, that sentiment or negative feeling is about 30%. This is only the fifth time ever that a negative reading has exceeded 60 in the survey's history. The bright side of that is historically 1 year returns from a level exceeding 60 have been higher by an average of about 33% a year later. However, I'll caution you that that's a very small sample size. Similarly, many markets around the world have retouched lows for the year, and most markets have moved back into bear market territory and levels we've not seen since the summer of 2022. Canada's been once again a bright spot at a significantly better, albeit still negative return year to date. Historically, the average bear market decline is a little over 30%. Some are better, some are worse. So there could still be more risk in the market. But remember from my last video, forecasting is very difficult. Once again, once a bear market does hit a bottom, the average 1 year return from that bottom is a little over 40%. So given that we're closing in on 25+% down in U.S. markets, it's hard not to get a little positive about the outlook for going forward. Remember, markets are always adjusting and forward looking. The data companies releases backwards looking. It's always a prior quarter, but their outlook that they're producing is a quarter a year or multiple years down the road. And markets turned negative early this year on worry of a recession, and they will turn likely before we're out of the recession. Personally, though, when I compare what's going on now to the summer of 2020, I have a much brighter outlook on things. Back then, the world was still kind of in a fog on the original COVID. My family was struggling with childcare and working from home and getting our entire team staff from home. Um, many businesses were closed and adjusting to the way the world travel was non-existent. Maybe relevant today, the Jays were on a pennant run in a foreign country with fans on popsicle sticks, and I was wondering if school was going to start in the fall and what it was going to look like. Compare that to today when things seem very normal compared to the past, and it's much rosier than back then. The pendulum typically swings too far positive and too far negative, and that leads to adjustments both ways as we get back to normalizing and averages over time. And the world's coming to grips with a very large move in interest rates across the globe. And I can't help but wonder if even a tiny bit of good news, especially if it surprises, leads to a very quick change in sentiment from maybe a little more bear tone to a little more positive outlook. But once again, forecasting's hard, and we'll see. But historically, going back to the average does occur. No new reading to let you aware of now, as it's only been about 2 weeks since my last video, and I've been spending a lot of time watching the Jays on their playoff run. Plus, college football and my Michigan Wolverines are back, but I've started a few different books that I'll share later on in future videos. The full September market review video will come from another member of the team in the next week or two as we change things up so that you don't get tired of looking at me and my message doesn't get stale. So look forward to meeting another member of the team in the next week or two. Please make sure that you're following our LinkedIn, Twitter, YouTube, and Facebook for all of our latest insights. And as I've said in every video, if you need any money or you're uncomfortable with your current risk, make sure to reach out to any member of the team, as it's easy to have more risk when things are going well than when they're changing. So have a chat with your goals and where things stand, not only for today but going forward with the team. Take care and have a good rest of the week. Thanks. Bye.